Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everyone, I'm Jeremy Mullen here today for our top stock pick segment. Today's pick is Polaris, ticker symbol PII. Polaris designs, engineers, and manufactures off-road and on-road vehicles. The company also makes snowmobiles, motorcycles, and boats. But before we dig into the stock, let's talk about the brands. The off-road vehicles include ATVs and side-by-sides. The on-road segment includes the popular Indian motorcycle brand, as well as the Slingshot open-air roadster, the lightweight European brand Axum, as well as GEM, who make electric low-speed vehicles. The snow segment includes popular Polaris snowmobile and the Timbersled snow bike, which I'm thinking about buying due to the 1.5 foot snow we just got here in Chicago. Just kidding. But the Polaris boat segment features a lineup of highly recognizable pontoon deck cruiser boat brands such as Bennington, Godfrey, and Hurricane. So they got a lot of things going on, 4 different segments there, and their customers love them all. The company also has a commercial government defense segment that offers vehicle solutions for job sites with a full fleet of purpose-built utility and transport vehicles. The stock is now in Zacks ranked number 2 buy. So let's take a look at the recent earnings and estimates and find out why. For earnings, Polaris reported EPS in late January, and they beat on both the top and bottom lines. The company saw a 17% EPS beat to the upside and guided fiscal year 21 range significantly higher, now seeing $8.45 to $8.75 versus the previously expected $7.75. Year-over-year margins were higher, and the on-road vehicle segment stood out, with sales up 29% from last year. On the call, the CEO credited all brands saying, quote, "Our highly innovative product line of ORVs, snowmobiles, and boats brought in new customers and power sports enthusiasts to Polaris. Since earnings estimates have surged higher, the current quarter has jumped from 97 cents to $1.52, or 56% higher." Okay, let's talk more about the company and its fundamentals and then go over some charts. First, fundamentals. Polaris was founded in 1954, headquartered in Medina, Minnesota. The company has a market cap of $7.5 billion, with a forward PE of 14. The stock has a Zacks style score of A in both growth and value. The valuation players should love this stock's low PE, and with a 2% dividend, there is motivation to be patient longer term. Okay, now let's look at the charts. Okay, here's the chart from June, and we can see it kind of chopped around between 90 and 110, 100 area. The 200-day has always been nice support for the stock. And, recently, this year, we've kind of broken higher here, going above that 110 level. Now the 21-day, the green line here, looks to be some support. They tried to test it, couldn't. Tested it recently, and we have, went higher into after earnings, but sold off. So I like this recent sell-off to the 21-day. Also, it created this buying opportunity. If you draw from a Fibonacci retracement from this low right here to the recent high, we held at this 61.8% retracement, which also was the 21-day moving average, and then bounced from there. So the short-term targets, I have 134, but on a longer-term frame, I think there's more meat on the bone here. If we look at that, this is a chart from about a year, and you can see in the beginning of, or the late 2019, the highs from December here all the way down to the March panic lows gave us this 61.8% retracement. So when you're doing fibs, if this breaks, usually I use this 161.8 as targets. So you can see 147, there's a lot of room up. And if we go back to that last chart, as long as this 21-day, 50-day, and 200-day continue to hold, I will look for this 147 area to come into. And as I mentioned previously, with the value aspect and the dividend for you longer-term players, this is a nice little hold. So that's it for me on my top stock pick. Now here is Ben Rains with his.
Thanks, Jeremy. Ben Rains here again, and I'm taking a look at Zoom Video today. Clearly, the remote work world put Zoom in the spotlight, and its stock soared for months before falling back to earth in October. And the pullback actually created an opportunity for Zoom, and it's proven there's still plenty of appetite for the stock. ZM raised $2 billion by selling more stock at around $340 a share in an offering that closed in mid-January. Zoom stock has now climbed over 30% in 2021, and it's still not considered overbought yet in terms of RSI. Plus, it still rests 20% if it's off its October records at the moment, with it set to report its Q4 results on March 1st. So with this in mind, we're going to try to dispel some of the one-hit wonder worries about Zoom while looking at why it's today's top stock pick. So first, Zoom posted strong growth in its first year as a public company that happened way before the pandemic, with its fiscal 2020 revenue up nearly 90%. Then the world clearly changed overnight, and ZM's relatively easy-to-use cloud-based video conferencing offerings became a hit. Luckily, Zoom sales come from subscription-based business customers who pay for various services. So even though many people have stopped doing their family and friends calls, it doesn't really matter. Zoom clearly offers an array of communications services at various tiers offered to different businesses, from small businesses to enterprises, and then educational focus offerings as well. And obviously, we all hope the vaccine is going to help things return closer to normal by the end of the summer. So Zoom's longer term success really depends on the official start from that work from anywhere world, which Zoom is pretty convinced about is going to happen. So the pandemic has definitely seen companies decide to permanently cut back on rent and other commercial real estate expenses, and maybe cut back on work trips as well. Zoom has also introduced hardware offerings for homes and offices to help what they're expecting to be this hybrid environment. They also cited recently a study that they had commissioned where 80% of employees who are currently working remotely hope to continue to work remotely at least 50% of that time. So maybe 2 days in the office, 3 days out, something like that. We're really going to have a more digital-based workforce in the sense that most work was already being done digitally already. And it's not just Zoom talking up these possibilities. We saw Verizon pay to buy Blue Jeans, which is a video conferencing company. Salesforce paid $28 billion to buy Slack for a way to beef up its non-email communication services. So with this in mind, Zacks estimates call for Zoom's Q4 earnings to jump over 420% on 330% stronger sales. Overall, its full year 2021 earnings are projected to climb 725% on about 315% stronger revenue. That would see it climb from about $623 million to $2.6 billion. So a massive jump in just 1 year. And clearly, it would be nearly impossible to come anywhere near matching this growth next year. Nonetheless, Zoom sales are projected to jump another 37% or $1 billion above our current year estimate, with its adjusted earnings expected to continue to grow next year as well. So Zoom's positive earnings revisions help it land a Zacks ranked #1 strong buy at the moment. And it's also topped our bottom line estimates by an average of 90% in the trailing 4 quarters. So that does it for today's episode of Top Stock Picks on a Tuesday. We make sure to also check out our new Zacks.com/promo page. You're able to check out our new Headline Trader service. So make sure to sign up for that. Once again, I'm Ben Rains, and that was Jeremy earlier.